On Monday, during the Asian trading session, spot gold carried over the positive momentum from the weekend market, rallied sharply straight after the opening, and then maintained a range-bound consolidation trend without obvious one-way fluctuations. Overall, it still stood firm above the $5,100 integer mark. The driving logic of the market is clear, with mild gains between long and short forces, jointly contributing to the short-term range-bound consolidation trend. On the bullish side, the continuous escalation of the geopolitical situation in the Middle East has become the core support. It is reported that Trump tends to launch the first round of strikes against Iran in the next few days. The rise in geopolitical risks has driven safe haven funds to continuously flow into the gold market, providing strong support for gold prices superscript 4. At the same time, UBS raised its gold target price to $6,200 per ounce, coupled with the long-term positive factors of central banks around the world increasing their gold reserves, which further strengthened market bullish confidence and supported gold prices superscript 2. Superscript 4. In addition, Trump announced that he would raise the global commodity import tariff from 10% to 15%, triggering market concerns about the global trade environment and economic prospects, which indirectly boosted the rise of safe haven sentiment and supported gold prices superscript 3. On the bearish side, expectations for a Fed interest rate cut have temporarily converged. According to data from CME FedWatch, the probability of the Federal Reserve cutting interest rates by 25 basis points in March is only 1%, and the probability of keeping interest rates unchanged is as high as 95.9%. Coupled with the huge differences within the Federal Reserve on the interest rate path, some officials even mentioned the possibility of an interest rate hike. Market expectations for an interest rate cut have cooled down, exerting mild pressure on gold prices superscript 1 superscript 4. From a technical analysis perspective, the short-term bullish pattern of spot gold remains unchanged, and various technical indicators show that bulls have certain advantages, with specific analyses as follows. In terms of indicators, the RSI index is currently in the 60 to 65 range, operating in a relatively strong area, indicating that short-term bulls still have certain upward momentum, but the strength is relatively limited. The red column of the MACD indicator continues its expansion trend. The momentum column gradually strengthens, the bullish sentiment becomes more intense, and the short-term strong pattern is expected to continue. The key support and resistance levels are as follows. Support levels. For the short-term first support level, focus on $5,140. This level is an important consolidation level after today's post-opening rally and is also close to the 5-day moving average, with strong support effectiveness to prevent further decline of gold prices. For the strong support level, focus on $5,120. This level is an important support level for the recent oscillating upward movement and is also near today's intraday low with sufficient support strength. If this level is broken, gold prices are likely to further decline to test the $5,100 integer mark. For the extreme support level, focus on $5,100. This level is not only an important market psychological level, but also a core dividing line for recent long-short games. If it is broken, it may trigger a short-term pullback. Resistance levels. For the short-term first resistance level, focus on $5,170. This level is close to today's intraday high of $5,167.15, with relatively obvious pressure. If this level can be broken in the short term, it can further push forward. For the core resistance level, focus on $5,195. This level is near today's intraday high of New York gold futures. With strong suppression strength, and effective breakthrough requires sufficient volume support. For the strong resistance level, focus on $5,200. This level is an important integer mark. If it can be successfully broken, it will drive gold prices to move towards higher levels. All content is for reference only and does not constitute any investment advice. If you trade based on this content, you should bear your own profits and losses. Please subscribe, like, and share. Thank you for watching.